This is Alan Bush with the Daily Financial Forecast for Thursday, July 14th. Starting out with the stock index futures, another new round of historical highs for both the S&P and the Dow. Much of this strength linked to ideas that central banks around the world will be adding more stimulus. However, the Bank of England, who was widely expected to cut rates at their policy meeting today, did not cut rates. They kept their base lending rate at 50 basis points, which was very much a surprise. That would normally be a bearish influence on the indices, and yet we are sharply higher. So just another indication that stock index futures will probably continue to advance longer term if this market can trade higher on a bit of bearish news. Also, we are expecting earnings in the second quarter for S&P 500 companies to show another decline. This will be the fifth quarterly decline in earnings since 2009. So this is a very severe streak of lower earnings, and yet why do stock index futures continue to advance? And the reason is rates are going to stay very low for a very long period of time. So trade stock index futures from the long side. There is a lot left to the upside. Now moving over to the currency markets, we're seeing the pound sharply higher. As we mentioned, the Bank of England refraining from cutting rates as it was widely expected. So from an interest rate differential point of view, that was very bullish for the pound. However, the Bank of England did indicate that they will probably be easing at the August meeting. So any gains in the pound will probably be limited. In fact, I think this is probably a selling opportunity for the pound to top out in this area, as more accommodation is likely to come from the Bank of England. Also, the yen lower, as it appears very likely that the Bank of Japan will embark on a very aggressive new stimulus program, so the yen will probably continue to work lower near term. Interest rate markets continuing to come under pressure as flight to quality longs are liquidated, and it appears, at least for now, that the UK decision to leave the European Union is not the disaster that so many had warned us about, at least not yet. So that is the main reason why we are seeing pressure in treasuries. Longer term, though, I think as central banks add more accommodation, that we will see the interest rate futures markets stabilizing and gradually working higher. In the gold market, some pressure again today, again flight to quality, long liquidation. However, we are in a very, I think, important support area. I think that this is an area that will hold around the 1320 area. So look for a recovery this afternoon. Longer term, I think we can see higher prices, especially with inflation likely to be a problem down the road. It's not much of an issue now, but ultimately there will be, I think, rather severe inflation issues, and that will be the prime influence, the main reason why we do see a multi-year bull market in both gold and silver. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.